Welcome to the Rational VC YouTube channel, where we discuss all things building and investing. My name's Iman and I am a strategy consultant with 6 years experience helping companies grow and become more efficient. In this video, we'll be talking product market fit, the most elusive phenomenon in the business world that has helped companies grow like Amazon, Facebook, Google, Apple, Microsoft, and a whole host of newer companies like Airbnb and Tesla. If you're interested in startups, interested in building or investing in tech, please do consider subscribing to our channel and do hit the like button if you do enjoy this video, as it does help us with the YouTube algorithm. Without further ado, let's get into it. So, product market fit. What is it and where did it come from? In this video, we cover the history of product market fit, its definition, and 4 practical principles to help you understand and track it in the real world. 3 OGs of Silicon Valley have really coined the term product market fit. The first is Marc Andreessen. Marc is the GP, the general partner, and the founder of Andreessen Horowitz, one of the world's best and biggest venture capital funds. Marc, in 2007, wrote a blog called The Only Thing That Matters, and surprise, surprise, he was talking about product market fit. But Marc was building on the philosophies of 2 other OGs, namely Andy Rachleff and Don Valentine. Andy was the founder of Benchmark Capital, and Don Valentine was the founder of Sequoia. They're both very, very large and very successful venture capital companies. But what is it specifically that they said that has now led to a slew of people using the term and wanting to figure out what it is? Well, as Don pointed out, it really is just about having a compelling value hypothesis as a business that enables that business to outperform the competition. As Andy Rachleff put it, if you address a market that really wants your product, then you can screw up almost anything and the company will still succeed. Now, let's jump into 4 practical principles that help explain product market fit and can help you track product market fit. If you're a founder, these principles can help you improve your business. If you're an investor, these principles can help you identify businesses that are really good to invest in. The first is paying customers. Well, this is pretty obvious. If you don't have a product that people are willing to pay for, you probably don't have product market fit. In fact, if you can get customers to commit to your product and pay for it in advance of giving them the product, then that's a very good indication that you have product market fit. The second is user retention. In other words, what is the total proportion of your total active users over time? i.e., how many active users do you continue to have month on month, year on year, and how does that compare to your competition? If your customers are staying with you longer and therefore paying you more, then you probably have a core component of product market fit. Another component of user retention is if the customers are willing to be using that product even when it's broken or it's crashing. Think back to the early days of Facebook or any social media platform. There's always bugs, there's always problems, there's always crashes. However, people clamber to get onto these platforms. But why is that? Well, it's because these platforms have mastered network effects and therefore their user retention is really, really good. The third is user feedback. It's all well and good to keep a lot of customers, but if they're having a really bad time and you're not improving that time, well, you're kind of missing out on a big proportion of your product market fit capability. In practical terms, founders should run 30-day trials to figure out how disappointed users are if you then remove that product after that 30-day trial. If around 40% of your customers say that they're really disappointed, well, you kind of have some level of product market fit. And as prolific angel investor Elad Gil says, if you're getting literal love letters, the likelihood is you have product market fit. The reason behind that is because you're probably solving a significant problem for a niche number of people. And given that they've had that problem for a significant amount of time, they are seeing value in the product that you're providing. The fourth and probably most important part of product market fit is growth. What you want as a company is exponential organic growth. Exponential in the sense that it grows rapidly and compounds its growth year on year, over and over, and organic in the sense that you're not paying to bring those customers on. What that could look like is marketing spend, paying for users to trial the product. A good rule of thumb for exponential organic growth is that if more than 50% of your customer base are being acquired through organic means, i.e. word of mouth, then you probably have some level of product market fit. If your users are really excitable or even addicted to the product, then you likely also have product market fit, or you're selling some sort of drugs. And finally, the most important part of growth is whether that growth is efficient. It's important that the cost of onboarding new customers, the cost of finding, selling, and onboarding them is lower than the lifetime value that that customer is providing the business. It's kind of simple, but a lot of companies in their early stages, and even as they develop, tend to forget about the unit economics. So, to conclude, we've got 4 elements of product market fit. You need paying customers, user retention, user feedback, and efficient growth. If you can master all of these separate elements, then the likelihood is you're on the right track. So, I hope you enjoyed that video and learned a little bit more about product market fit and how to action it in the real world. If you did enjoy the video, please consider subscribing, and please do hit that like button as it really does help us with the YouTube algorithm. Stay tuned, we'll be posting weekly information on all things building and investing. Thank you for watching, peace.